I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it will keep generating momentum from here.
Wait a minute, everyone. Welcome to Bitcoin Saylor, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Saylor offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Saylor. Subscribe now. In today's video, Michael Saylor talks about why not the best time to buy more Bitcoin. Saylor shares his prediction for Bitcoin in the next 10 years ahead, and why he thinks the adoption of the Bitcoin network will increase massively because of the Bitcoin halving and BlackRock ETF and more. So without wasting any time, let's dive into the video.
I think that we're living through the Bitcoin gold rush era, and I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think of, and actually of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 0.1%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude.
Bitcoin is supplying some classic memes this week, and it goes beyond the 420 its halving date. Thanks to the success of the spot Bitcoin exchange-traded funds, ETF, market observers are celebrating a halving which has been almost too perfect. BTC price action may be firmly sideways this halving, but its timing is giving some a feeling that it was all meant to be. In a post on X, formerly Twitter, Eric Balchunas, a dedicated ETF analyst at Bloomberg Intelligence, revealed a curious halving day coincidence. Not only did the seminal event hit on April 20, 4/20th, a key meme date in itself, but the largest United States spot Bitcoin ETFs sealed 69 days of straight inflows. It's a little too perfect, Balchunas summarized. The Bitcoin ETF have seen a marked slowdown in inflows since hitting their peak in March. Despite this, BlackRock's shares Bitcoin Trust, IBIT, the largest ETF by assets under management, has yet to see a single day of outflows. The latest data covering ETF flows, including from United Kingdom-based investment firm Farside, meanwhile shows momentum tentatively returning toward the end of last week. On April 19, IBIT took in just under $30 million, while the second largest ETF, operated by Fidelity Investments, managed nearly $55 million. Outflows from the Grayscale Bitcoin Trust, GBTC, an ongoing topic of debate in themselves, were modest on the day at $45.8 million. Recent Form 13 of filings, meanwhile, have led to concerns that Bitcoin ETF have not managed to permeate the mainstream majority. Discussing first quarter allocation data, Jim Bianco, creator of macro research firm Biacno Research, described it as a disappointment. Unrealized gains are shrinking fast. He added in a next thread about ETF investor gains versus current BTC price action.
So that being the case, really, this 10 years is your best chance to get Bitcoin. right? This is the gold rush because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency or is it a property? Or, there's massive debate. A lot of people say, well, it's a currency, and since it's not legal tender or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it. And it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right? Right? The people that criticize it, there's no way Warren Buffett spent 100 hours studying Bitcoin, right? There's not likely that everyone that criticizes it spent 100 hours studying it. They haven't read the Bitcoin Standard. They probably haven't listened to 20, 30, 40 hours of podcasts, right? So the critics are misinformed, and the mainstream investors, they have all the money. Right? There's $900 trillion of wealth out there. There's only $1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education.
As the block reward halved from 6.25 BTC to 3.12 BTC, miners initially face significant challenges. Omar Lopes, founder of Cryptoid Club, shared that a portion of the miners will be compelled to shut down their operations as continuing becomes economically unfeasible. Some will even find themselves operating at a loss. This scenario embodies a form of game theory, according to Lopez. Initially, if 1,000 miners are profitably mining 6.25 BTC, the profitability equation shifts dramatically post-halving when the reward drops to 3.12 BTC, spread among the same number of miners. This change forces those miners who cannot sustain losses to cease their operations. Eventually, this attrition might reduce the number to, say, 600 miners. For these remaining miners, the reduced competition for the 3.12 BTC could restore profitability, stabilizing the mining landscape. Miners follow the price of Bitcoin, not the other way around. If the price of Bitcoin is low and it's not profitable to mine, several miners will turn off their machines. Until it becomes profitable, for those remaining to compete for the 3.12 BTC game theory in all its glory, Lopes explained. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.